imagine like your bank can withstand anything, a hurricane, a cyber attack, even a pandemic, and your money is, still safe, still accessible. That's the whole idea behind operational resilience. And that's what we're diving into today. How Bermuda is like leading the charge and making this a reality. So you gave us this really interesting set of documents, a consultation paper and a draft code from the Bermuda Monetary Authority, both focused on operational resilience and outsourcing for all sorts of financial institutions. So our deep dive today is going to like unpack this new code and what it means for the future of finance in Bermuda. We'll explore important business services, the growing role of outsourcing, and how the BMA plans to ensure that these institutions can like weather any storm, really.
It is fascinating how a place like Bermuda, such a tiny island,
Right.
is setting a precedent for the entire global financial system. It's amazing.
It really is. And it feels like incredibly timely, wouldn't you say? The world's financial systems are so interconnected these days, and we expect 247 access to our money and services.
Oh, absolutely. And that interconnectedness, right? That's exactly why operational resilience is so crucial.
Right.
Even a small disruption in one part of the system can cascade and cause like huge problems, major problems across the world.
So the BMA is saying that like traditional operational risk management just isn't enough anymore.
Yeah.
Can you help me understand why that is?
Well, think of it this way. In the past, the focus was always on preventing bad things from happening, right? But in today's world, it's simply not enough.
Yeah.
We can't predict or prevent every hurricane, cyber attack, or pandemic.
Right. Okay. So it's not just about like avoiding risk.
Right.
What's like the shift in thinking here?
The shift is towards resilience. It's being able to adapt, to bounce back no matter what gets, thrown your way. The BMA is pushing for financial institutions to build resilience into their very DNA, like from the ground up. It's like, building a house designed to withstand earthquakes. You're not just hoping it won't happen. You're actively preparing for it.
That makes sense.
Yeah.
This code applies to like quite a range of financial players in Bermuda, right? It's not just the big banks.
That's right. It covers banks, insurers, trust companies, digital asset businesses.
Wow.
The whole spectrum, really. But here's where the BMA's approach gets really interesting.
Okay.
They're emphasizing the proportionality principle.
Proportionality principle. I'm not familiar with that. Break it down for me.
Okay. Imagine you have a tailor making a suit.
Okay.
They wouldn't use the same measurements for a child as they would for an adult.
Yeah.
The BMA applies that same logic to financial institutions.
Yeah.
So a global bank needs a different level of resilience than, say, a small local trust company. So the BMA will tailor its expectations and requirements based on each institution's nature, scale, complexity, and overall risk profile.
Okay. So it's not like a one-size-fits-all.
Right.
Got it. Okay, now let's talk about important business services.
Yeah.
What exactly are those, and why do they matter so much?
So important business services, or IBS, these are the core functions that a financial institution absolutely must be able to perform, even in a crisis. These are services that if disrupted, could cause significant harm. And we're not talking just inconvenience here.
Yeah.
Real financial losses, damage to credit ratings, even risks to Bermuda's entire financial system.
Wow. Can you give me like a concrete example?
Absolutely. Let's take banking, since you mentioned you're interested in that. For a bank, important business services would include things like deposit taking, payments processing, lending. These are the functions that keep the economy running, right? If people can't access their money, businesses can't make payroll, the whole system starts to grind to a halt.
Makes sense. And I imagine this translates to other areas as well, right?
Right.
What about the insurance sector?
Yeah.
Like, for example?
In insurance, a prime example would be claims processing.
Yeah, okay.
So let's say a major hurricane hits Bermuda.
Right.
Policyholders need to be able to file their claims and receive payouts, quickly.
Yeah.
If that system breaks down, it creates a whole new level of disaster on top of the hurricane itself.
Oh, absolutely. Okay. So institutions need to identify these critical services.
Yes.
But then what? What are they like actually supposed to do to ensure resilience?
Okay, so once they've identified their important business services, they need to map out everything
Okay.
they rely on to deliver those services.
Yeah.
People, processes, technology, facilities, information. It's about understanding all the pieces of the puzzle and how they all fit together.
This seems like it gets really, really complex.
Yeah.
Especially as financial institutions are increasingly relying on, third-party providers
Yeah.
and outsourcing for some of these essential functions.
You're absolutely right. Outsourcing can be a game changer in terms of efficiency, cost effectiveness,
Right.
but it also introduces new points of vulnerability. So the BMA is paying close attention to how institutions manage these outsourced relationships and ensuring they maintain adequate control.
Okay. So let's say a bank relies on a third-party data center for its online payment system.
Hmm.
What if that data center gets hit by like a cyber attack
Yeah,
or a natural disaster?
that's a great question. The BMA expects banks to have backup plans in place.
Okay.
Things like, redundant systems
Right.
or the ability to quickly switch to a different provider. The point is, they need to be able to keep those payments flowing no matter what.
Okay. What if it's not technology that fails, but like a human element?
Yeah.
What if a key employee, who's essential to disaster recovery, gets sick,
Right.
like right before a major disruption?
That's where redundancy and cross-training is so important.
Okay.
You can't rely on a single person, for critical functions.
Right.
The BMA wants institutions to ensure that multiple people can step in and keep things running smoothly if someone is unavailable.
So identifying those important services and mapping out, the resources, that's just the first step. It sounds like there's like a lot more to this resilience puzzle.
There is. The next piece is figuring out how much disruption you can actually tolerate
Okay.
before it starts to have, a serious impact.
So how do they even begin to measure that?
The code introduces this concept of impact tolerances, which are like setting time limits for how long you can be without something before it like really starts to mess up your day. And each impact tolerance is tied to what's called the maximum tolerable period of disruption, or MTPD.
Okay, hold on. MTPD. Explain that one. Like I'm 5.
Okay. Think about your internet going down.
Okay.
How long could you go without it before it like really starts to mess up your day? A few minutes, an hour,
Right.
a whole day. That's kind of like what MTPD is for financial institutions, but on a much bigger scale, obviously. Yeah. It's the maximum amount of time they can afford to have a particular service disrupted before it starts to cause, serious problems for their customers, their stakeholders, or even the entire financial system.
So going back to like our insurance example.
Yeah.
How would like an insurance company figure out the MTPD for its claims processing system?
That's where they have to put themselves in the shoes of their policyholders.
Right.
So imagine a major hurricane hits Bermuda. People's homes are damaged, they're stressed, they need help.
Right.
How long could the insurance company afford to have its claims processing system down
Right.
before it starts to severely impact those policyholders? A day, 2 days, a week.
And I imagine the MTPD for something like a bank's ATM network would be much, much shorter, right? People rely on ATMs for, quick access to cash.
Exactly. Even a few hours of disruption could cause major problems.
Right.
People might not be able to buy groceries, gas. Businesses might not be able to make deposits. The whole thing could snowball pretty quickly.
So they figure out their impact tolerances.
Right.
And MTPDs.
Yeah.
What comes next?
Communication.
Okay.
Communication is absolutely key. They need solid communication plans in place, both internal and external.
It's like when airlines have weather delays.
Yeah.
Or utility companies have, power outages.
Mm-hmm.
The more information they give you, the less frustrating it is.
Absolutely. The BMA wants institutions to be clear, to be transparent with everyone, their customers, regulators, the media. It's about managing expectations during a disruption, keeping people informed, and preventing panic or rumors from spreading.
So the BMA is really pushing for like a proactive approach here, not just waiting for something bad to happen,
right,
and then scrambling to react.
Exactly. It's about anticipating potential problems, building systems that can withstand them. And it's not just about having these plans on paper.
Right.
The BMA is going to require institutions to actually test their resilience.
So like Fire drills, but for financial meltdowns.
Yeah, you got it. They'll have to run simulations
Wow.
based on severe but plausible scenarios.
Okay.
Things that, could realistically happen and would have a significant impact on their operations.
Right.
The BMA wants to see how these institutions perform under pressure, whether they can adapt and recover effectively.
And I'm guessing the BMA won't be just like sitting back and observing these tests.
Oh, absolutely not. There'll be active participants helping to design the scenarios, evaluating how well the institutions respond. They're looking for evidence that these resilience plans aren't just theoretical.
Right.
They're actually workable.
That makes me wonder, what if an institution fails one of these tests?
That's where the learning and adapting part comes in.
Right.
Operational resilience isn't a one-time fix. It's an ongoing process. Every test, every real-world disruption is a chance to gather valuable data, to learn from mistakes, to, make your systems even stronger.
It's like studying for an exam.
Yeah.
The real learning happens when you review your wrong answers and figure out, how to improve your strategy for the next one.
Exactly. And just like with studying, the more you practice and refine your approach, the better prepared you'll be when the real test comes along.
Okay. Before we move on, let's circle back to outsourcing for a moment.
Yeah.
We touched on it earlier, but it seems like a pretty big deal in all of this.
It is. The financial sector relies heavily on outsourcing, and it's only going to increase in the future.
Right.
It can, bring huge benefits. But it also introduces new risks that need to be, carefully managed.
So how is the BMA addressing those risks and ensuring that, outsourcing doesn't undermine operational resilience?
They're laser focused on oversight and control.
Okay.
The BMA wants institutions to be very, very deliberate and thoughtful about their outsourcing arrangements. It's not about just, blindly trusting your service providers.
So what are they specifically looking for?
They want to see evidence of thorough due diligence, really, really understanding the risks involved with each outsourcing arrangement. They expect robust risk assessments and contracts that clearly define, roles, responsibilities, and expectations.
Contracts that spell out exactly what happens if things go south.
You got it. The BMA wants institutions to be prepared for any eventuality. They need to know who's responsible for what, how disruptions will be handled, and how they'll protect their customers' interests. If a service provider fails to deliver.
This all paints a very clear picture.
Yeah.
Bermuda is serious about operational resilience, and they're not messing around.
They're not. And it's a good thing. By preparing for the worst, they're aiming to create a financial system that can weather any storm.
And it's not just about Bermuda, right?
Yeah.
What they're doing here has implications for the global financial landscape.
Absolutely. Bermuda is setting a new standard.
Yeah.
One that other countries are watching closely. Many are already starting to adopt similar measures.
It's like a ripple effect, but in a good way.
Exactly.
Bermuda's leading the charge, and the rest of the world is taking notice. Okay, so we've covered a lot of ground in our deep dive today. We talked about why operational resilience is so important, how institutions are expected to identify their critical services and map their resources, the role of impact tolerances in testing, and we also dug into the complexities of outsourcing and the BMA's focus on oversight and control.
And we explored the importance of continuous learning and adaptation. After all, in a world of constant change, ever-evolving risks, you can never truly be done with operational resilience.
What stands out to you as the most significant takeaway from all of this?
For me, it's the proactive, forward-thinking approach. It's not just about reacting to problems. It's about anticipating them,
right,
and building systems that can withstand whatever comes their way.
I agree. It's like they're saying, let's not just wait for the next crisis to hit. Let's prepare for it now.
Yeah.
And that brings up an interesting question. How does this focus on operational resilience impact, the average person? Why should anyone outside the financial industry, care about what's happening in Bermuda?
That's a great question. And it's one we'll explore in more detail in the next part of our deep dive. Because the truth is, a more resilient financial system benefits everyone. It means greater stability and reliability for the services you depend on every day. your bank accounts, your insurance policies, your ability to pay for things online or at the store.
So stay tuned because we're just getting started. We'll be back in a moment to unpack the broader implications of operational resilience,
Yeah.
what it means for you and the future of finance.
It's easy to think about, financial regulations as something that only affects like big institutions
Yeah.
and industry insiders. But the reality is a more resilient financial system benefits everyone.
Yeah, I'm really curious to explore that idea further. How does this all like translate to the everyday lives of people in Bermuda
Yeah.
and even beyond?
Think about the services you rely on, every single day. Your bank accounts, your insurance policies, your ability to pay for things, online or at the store. These are all underpinned by the financial system.
Okay, I see the connection, but what's like the real world impact if that system isn't resilient?
We all saw it back in 2008 during the global financial crisis when one part of the system falters, it can have a domino effect on the entire economy. Suddenly, businesses can't get loans, people lose their jobs, even accessing your own money becomes a challenge.
That's a scary thought. So by pushing for operational resilience, Bermuda is essentially trying to prevent that kind of meltdown from happening again.
Exactly. They're saying let's not just wait for the next crisis to hit. Let's prepare for it now. And that's not just some feel good statement. The BMA is putting real teeth behind this new code.
What do you mean by teeth? What happens if an institution doesn't comply with these operational resilience requirements?
There are serious consequences, fines, restrictions on their operations, even the loss of their licenses. The BMA is making it very clear that operational resilience is not optional. It's essential. They're holding these institutions accountable for protecting their customers and the overall financial stability of Bermuda.
And it sounds like that message is being heard like far beyond Bermuda's
Oh,
shore.
absolutely. Other countries are watching very closely, and many are already starting to adopt similar measures. It's like a ripple effect, but in a good way.
Yeah.
Bermuda is leading the charge, and the rest of the world is taking notice.
So as we unpack this idea of resilience further, I'd love to touch on something that really struck me. The concept of impact tolerances and those maximum tolerable periods of disruption,
Right.
or MTPDs, that we talked about earlier.
Yes, those are crucial elements of operational resilience. It's not just about having backup plans. It's about understanding how much disruption you can actually withstand before it starts to cause serious problems.
Can you give an example of how an institution might go about determining its MTPD for a particular service? It seems like a pretty subjective process.
It is, and it requires a deep understanding of your customers, your operations, and the potential impact of a disruption. Let's go back to that example of a bank's ATM network. They might start by asking questions like, how many customers rely on our ATMs on a daily basis? What are the alternative ways for them to access cash if ATMs are unavailable?
Yeah.
What are the potential consequences for customers if they can't access cash for a certain period of time?
And those consequences could range from like minor inconvenience to major disruptions in their lives.
Yeah, exactly. Someone might miss a bill payment. A business might not be able to make payroll, or a traveler might be stranded without access to funds.
Yeah.
The bank needs to weigh all of those factors and come up with an MTPD that balances the needs of its customers with the realities of its operations.
So it's about finding that sweet spot where you're prepared for the worst, but not overspending on resilience measures that might not be necessary.
Right. It's a balancing act, and it's not a one-time exercise. MTPDs need to be regularly reviewed and updated as circumstances change. New technologies emerge, and we learn from real world disruption.
That makes sense. It's like a continuous feedback loop.
Yeah.
Always striving to improve your resilience posture.
Precisely. And that's where the BMA's emphasis on testing comes in. Those simulations we discussed earlier are crucial for validating these MTPDs and ensuring that they hold up under pressure.
So it's one thing to say, like, we can handle our ATM network being down for 4 hours, but it's another thing to actually test that assumption and see what happens when the systems are pushed to their limits.
Exactly. Testing reveals those hidden vulnerabilities.
Right.
Those unforeseen consequences that you might not have anticipated on paper. It allows you to learn from your mistakes and make improvements before a real crisis hits.
All this talk about resilience and preparing for disruptions makes me wonder, is there a risk that we become too focused on the negative,
Yeah.
on what could go wrong? Could this stifle innovation in the financial sector?
That's an excellent question, and it's a valid concern. We don't want to create a culture of fear or paralysis, but I think it's about finding the right balance.
Yeah. How so? How can the BMA and these institutions encourage innovation while still prioritizing resilience?
It's about fostering a culture of responsible innovation, where new ideas and technologies are evaluated not just for their potential benefits,
Right.
but also for their potential risks and vulnerabilities.
So it's not about saying like no to new things. It's about approaching them with a critical eye and asking, how can we make this resilient? How can we build safeguards into this from the ground up?
Exactly. And that's where the BMA's focus on oversight and control, especially when it comes to outsourcing, is so important. They want to make sure that institutions are carefully evaluating the risks associated with new technologies and service providers.
So before we wrap up this part of our deep dive, I'd love to hear your biggest aha moment from all of this. What's the one thing that's really, really stuck with you as we've explored operational resilience in Bermuda's financial sector?
For me, it's the realization that operational resilience isn't just about preventing bad things from happening. It's about acknowledging that bad things will happen.
Yeah.
And building systems that can withstand them. It's about moving from a culture of reaction to a culture of resilience.
That's a powerful shift in mindset. And it makes me think about the role of the individual in all of this. If institutions are stepping up their resilience game, what can we as individuals do to contribute to a more resilient world?
That's such an important question, and it's one we should all be thinking about, because ultimately a resilient society is built on a foundation of resilient individuals.
Okay, so as we wrap up our deep dive into operational resilience, I kind of want to shift gears a bit, and talk about what this all means for you, the listener. We've explored how Bermuda is raising the bar for financial institutions. But how does this translate to the average person? What's the takeaway for someone who might not be like a banker or a regulator?
Yeah, that's a great question. At its core, operational resilience is about creating a more stable and reliable world, right? When financial institutions can withstand these disruptions, it means you can continue to access the services you rely on.
Right.
Even in times of, crisis, your money is safer. Your insurance claims are processed, smoothly, and the economy keeps humming along.
That makes sense. But beyond the financial aspects, is there a broader lesson here about resilience as a mindset?
Oh, yeah.
Something we can, apply to other areas of our lives.
Yeah, absolutely. We live in a world of constant change and unexpected challenges, whether it's a natural disaster, a health crisis, or a technological disruption.
Right.
The same principles of operational resilience that we've discussed today can be applied to our personal lives, our communities, and even our businesses.
So it's about anticipating those challenges, building in safeguards, and developing the ability to adapt and bounce back when things inevitably go wrong.
Precisely. It's about moving from a mindset of what if this happens to when this happens, how will I respond? It's about embracing the unknown, not fearing it.
I love that. So for our listener, as you think about like the services you rely on every day, banking, insurance, payments, I want to leave you with this question. What level of disruption are you willing to tolerate? And what role do you think individuals should play in building a more resilient world?
Those are great questions to ponder. We often think of resilience as something that happens at the institutional level.
Right.
But it really starts with each of us. It's about taking responsibility for our own preparedness, being aware of potential risks and developing coping mechanisms to deal with challenges.
Could you give some examples of what that might look like in practice? What are some small steps individuals can take to to build their own resilience?
Sure. It could be as simple as having a backup plan for essential services,
Mhm.
knowing how you'll communicate if your phone is down, having a cash reserve in case ATMs are unavailable, or having a plan for alternative transportation if roads are closed.
So it's about like thinking ahead and not taking those everyday conveniences for granted.
Right. It's also about diversifying your resources, not putting all your eggs in one basket. Maybe that means having accounts at multiple banks, exploring alternative energy sources for your home, or even just learning new skills that could be valuable in a crisis.
Beyond the practical steps, there's also like the mental and emotional aspect of resilience, right?
Oh yeah.
Developing the ability to stay calm under pressure, adapt to change, and find like creative solutions to
Yeah.
problems.
I completely agree. Resilience isn't just about having the right tools and resources. It's about having the right mindset.
Yeah.
It's about cultivating a sense of optimism,
Mm.
resourcefulness, and self-reliance.
So as we conclude our deep dive today, I,
Mhm.
I think the key takeaway is this. Operational resilience isn't just a buzzword for the financial industry.
Mhm.
It's a concept that has the power to transform the way we live, work, and interact with the world around us.
Well said. By embracing these principles of operational resilience, we can create a more stable, secure, and ultimately a more fulfilling future for ourselves and generations to come.
That's a great place to end it. As always, it was a pleasure diving deep with you.
Thanks for having me.